Okay, good day, everybody. My name is Lazarus Amukeshe, and it's been a while since we last brought to you the economic update. But worry not, we are back again. And as always, I'm joined by Eloise du Plesis. Eloise is the head of research at PSG Namibia. Eloise, welcome.
Hi, Lazarus, and a good day to all our viewers.
Yes, Eloise, today I really want us to talk about the Namibian economy in general. I think we've been hearing quite a whole lot of stories about where we were last year, where we think we're going this year. But maybe just give us a little bit of a breakdown on really what transpired last year and what you think this year is going to play out. High level, basically.
Yes, so let's see what been happening in the economy. And if we look at it, our real GDP fell by 8% in 2020 as our tourism and transport and mining and manufacturing industries just tanked due to the adverse effects of the response to the coronavirus pandemic. We forecast for 2021 a weak recovery, with GDP expanding by 3.1% in 2021. I've been told that I'm apparently optimistic. So I don't know, but that's what I've got for now. This bounce back will be supported by lighter COVID restrictions, base effects largely, and higher commodity prices for Namibia's key exports. But it's still going to be quite constrained by this slow recuperation in services activity. Our current account balance has improved since the second quarter 2019, when it was the most negative that we've seen it, because we've got lower goods imports because of our lower oil prices and very weak domestic demand. So we shouldn't be too glad about this small current account deficit, or even the surplus that we've seen in some quarters, because it masks large declines in our leading exports like diamonds, copper, processed fish, and livestock. We expect that the current account will swing from the surplus to a deficit again in 2021 because of this wider trade deficit and much lower SACU revenues. If we look at the interest rates are down 275 basis points. Now, if an economist is talking in basis points, 2.75%, our repo rate has fallen. So if you have bought a car on credit, if you've got a home loan, you would have seen that during last year when the repo rate fell by that 2.75%, your monthly payments would have been lower. And we expect that the Bank of Namibia will keep interest rates on hold in 2021 in line with South Africa. And we expect that inflation will accelerate, and we've already started to see acceleration in our inflation, largely due to fuel prices and then food inflation along with that as well. So if we look at exactly what happened, it was the worst GDP contraction that we've ever seen. In line with our estimates, the preliminary figures show that the GDP declined by 8% as the COVID pandemic and the response to it wreaked havoc on economic activity. The economic performance deteriorated from a revised 0.6% to a contraction of 8%. So if we look at the economy from the production side, hotels and restaurants were down 33%, transport down 22%. And those industries were the ones that were the hardest hit because of the devastating impact of the travel restrictions. Other service industries like wholesale and retail, that one down 11%, and financials also down 11%, were severely affected by reduced household incomes because many employees had to take pay cuts or were actually laid off during this time. What I've got here is an analysis that we do at PSG to make sense of these growth numbers, because the moment you get into declining numbers, the moment you're dealing with negatives, you don't really visualize it the same way as you do a growth number. So what I do in this graph is I show you the output of the economy in nominal terms. So every one of these bars shows the output of the economy for the previous 12 months. Mm-hmm. And you can see here that we peaked in Namibia. Our economy had the highest output in the third quarter of 2018. Mm-hmm. And since then, every quarter has been worse and worse and worse and worse. So when we had an uptick here at the beginning of 2019, that still didn't get us back to where we were in Q3 2018. So since that peak to where we are now, we've wiped off around 14 billion of the economy. So last year was exacerbated by mining and manufacturing also suffering steep declines, along with the transport and travel that we've already spoken about, because of this low global demand and just production stoppages. Our key minerals like diamonds and uranium were not spared from these COVID-19 effects either. And the performance of the manufacturing industry decline was actually broad-based, but the beverages took the biggest beating, right? That's when our alcohol manufacturing had to shut down during the lockdowns. So the ban on the alcohol sales affected the beer production, but on the mining side, Scorpion Zinc Mine was also placed in care and maintenance. So that also had a negative effect. Just if we look at the overall big picture, we can now blame COVID for a lot, right? We can blame COVID for that last little downwards that we're seeing here. But that's not the only problems we have, right? We've been seeing these declines since 2018. It's a lack of investment at the end of a boom period in mining and real estate and public infrastructure. And those things have curtailed the construction industry. We'll look at the construction industry a bit later. And then the prices of our export minerals, like diamonds and uranium, has really been depressed. And before we had the good rains, we also suffered through a protracted drought. So there are a few factors at play here, but they've all resulted in what we're seeing right now. So maybe we can talk a little bit through some of the sectors specifically.
Yes.
If we look at agriculture, the drought that I just spoke about in 2019 had a significant adverse effect on the marketed cattle numbers during 2020. And the Meat Board of Namibia actually estimates that the total cattle marketed decreased by 47% during 2020 to reach only 247,000. And this drastic decrease was the result of a drive by producers towards restocking herds after the 2019 drought. So as a result of this shortage of marketable animals, what happens when supply is low? The price of the weaners just surged. And that trend continued until the end of 2020. Namibia weaner prices actually averaged $35 a kilogram during 2020, which compared very favorably to the South African weaner price of 32 Namibian dollars per kilogram. And the B2 carcass price remained stable at 45 compared to almost the same in 2019, contrary to the fact that many cattle farmers expected a price increase here as well. So there was, along with everything that happened, there was actually a demand reduction as well for beef. So, you know, you when you look at economics, and economists can have big fights about this as well. You sit with the supply side and the demand side. And in this cattle scenario now, we're actually seeing both play out, because you had the supply constraint. And so you would think that prices would have shot up. But because 2020 was such a horrific year for the economy, people didn't have demand for beef. They simply couldn't afford it. They couldn't eat it. So they couldn't buy beef to eat. And so the price didn't shoot up. It just actually remained where it was. So if we move on from the meat to the cereals, our crop harvesting for the 2020 main season, the maize and millets, ended in June, and production is actually estimated to have come in at 175,000 tons, which is well above average, and a substantial rebound actually compared to the drought-affected 121,000 that we saw in 2019. So you can see that on this graph, just that jump from 2019 to 2020. And so the main cereal producing areas in the north and northeast regions, following a dry start to the season, the rainfall levels improved in December, and so the crop yields were actually very good in 2020 compared to 2019. We also had the locust outbreaks. The Ministry of Agriculture actually estimated that 150,000 hectares of grazing land and 300 hectares of maize and pearl millet have been affected by those locusts. But despite these adverse conditions, our cereal crop for 2020, 2021, because remember that's now measured across the half years towards June 2021, there's actually a bit of an improvement. So we'll see where the cereal production actually comes in now at the end of June. And then just on the meat, the beef prices have now actually increased a bit, not that much, about $2 per kilogram from January to February, which is about 5.23%. So now we're starting to see that increase.
That increase coming up, yeah.
In the beef prices coming through. Yeah, that's right. Looking at diamonds and uranium, which our mining industry is an interesting one because it forms a huge part of our GDP, right? So it brings a lot of money, but it doesn't employ that many people. Yeah. In contrast to the agriculture, which is actually a small part of GDP if you look at it, but it employs the majority of people in Namibia. So it's always important to balance these two things and realize what you're dealing with each of these. Now, we've got the richest known marine diamond deposits in the world, and we're among the top 10 producers of gem quality diamonds. But our production has been seriously hampered by weak demand on the international market. And Deb Marine actually reported a 13% decline in production in 2020 because the demand just plummeted during COVID-19, right? One place where a lot of people buy jewelry is at airports. Yeah, and there was no one going to any airport in 2020. Yeah. Now that has a knock-on effect because the royalties and the tax from the diamond sale also fell by around 6%. So it's got an effect on our government finances as well. And so Deb Marine did partner with African commercial banks for a $375 million financing deal to build a new mining vessel. And so the building work on that ship is currently underway. So we'll see how that will affect output when that vessel is completed. Now, if we look at the other minerals, we mine, a bit of copper, gold, zinc, and then obviously the uranium. And you can see how on the graph how the output, that's now the black line. The black line is our production index, right? So that goes up and down and up and down, and then you can see that long-term uranium price. Now, and you can see here at the beginning of 2020, that uranium price started ticking up. And it's largely because the biggest uranium producers in the world, in Kazakhstan, cut a lot of their production. So that increased the price of uranium. And we will now have to see if this long-term price can get just a little bit higher, we can see that some of our uranium mines that are currently just in care and maintenance can actually open up again. So we're all hoping for higher uranium prices. We're all hoping that the world moves to nuclear energy, and that uranium price can tick up a little bit.
Yeah.
So let's talk a little bit about construction, because that is also a sector that gets a lot of media attention, and sometimes we don't really know what's going on in the detail of things. This sector contracted by 12.3% in 2020, after declining in 2019 again. Now you can see this on my graph here at the end.
Yeah.
So at its peak, our construction industry contributed around 8 billion to GDP. What is the reason for this ramp up? That was the building of mines. So it's not the townhouses you see in Windhoek, and it's not mostly the government buildings that went up. This was mostly due to the mines being completed. So the moment Husab mine was done, you see this decline, and it hasn't recovered from there. So here in 2017, you can see it kind of stabilized out, and then it fell again a lot in 2019. And then just as it was beginning to pick up again in 2020, we had the COVID restrictions. So you see that decline again. The initiation of construction projects related to the Rural Water Supply Sanitation Trust Fund through the African Development Bank has actually led to this bit of the increase in the construction activity. And in early March, it was reported that the construction of that railway line in Namibia, in the north of Namibia, is around 90% complete. So that 10% remaining construction work for that Ondangwa Oshakati section is phase 3. And that final part of the construction will include construction for Oshakati station buildings and platforms and civil works. So maybe because of that project, we'll see a bit of an uptick. But I think it's important to keep this graph in mind when you think about the construction industry. We're now at levels, I mean, in 2013, we were at around 4.5 billion Namibian dollars of activity in the construction sector, and we're now just over 2.5 billion. So really a huge decline in construction. And now the big decline in our GDP is mostly as a result of this steep decline in wholesale and retail trade. So it contracted by 3.1% year on year in Q3 of 2020, compared to a decline of 7% in 2019. And again, you can see from this graph that I've got here on the total output on a 12-monthly basis, we peaked in 2016. And since then, wholesale and retail trade has just gone down, 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 down all the time. So even though there was record low inflation during 2020, the economic downturn and the job losses due to COVID-19 related lockdowns continued to hamper the retail and wholesale sector. We expect that 2021 might actually see a bit of a rebound in economic activity as the international supply chains come back to life, and the severe job losses has dealt a heavy blow to the industry. So this is going to be the one to look out for. One of the reasons for this decline as well is the Angolan retail tourists that disappeared when the oil price fell as much as it did, and they haven't returned yet. So I don't know if we can say we've reached bottom now, but again, we're now at almost 4 billion less than we were in 2013. So there's just been absolutely no growth in this industry for the last 7 years. We're worse off now than we were 7 years ago, which is not great. Then our port tourism industry. We estimate that it contributes around 4% to GDP in 2020, but the indirect value addition is much higher. It's around 10.9% of GDP because of all of the additional services that just come along with the hotels and restaurants. So the most recent tourism economics data indicates that our travel and tourism industry supported around 26,000 jobs directly and 728,000 jobs indirectly in 2020. So as these restrictions on travel, closed borders, it really devastated this industry. And we do expect that it can rebound to 5.2% of GDP in 2021, but it's still much lower than it was. And again, here you can see that hotels and restaurants is actually the one sector with the decline that we've seen in GDP. Hotels and restaurants actually continued to tick up very nicely since 2013, right?
Yeah,
that's one industry that's just kept going, and then you saw what the COVID-19 restrictions did in 2020.
So I think let me just stop you right here a little bit. So I think this is one of the graphs I believe we need to at least show the Ministry of Health, just to keep in mind. But yeah, you can continue.
Yes, now it's a fact that our economy is heavily dependent on international travelers, and the decisions that are made definitely impact a lot of people very directly in the sense of whether they can have a livelihood or not. If we look at where our indicators now are at the end of May, we now need to start seeing, as we get these numbers for the first quarter in 2021, what looks better, what has kind of improved, what can we, look forward to for the rest of the year to get to my optimistic 3.1% growth.
Yeah.
So this is the last bit of information that I want to talk about, and we can see that there are some positive points. So like we talked about, the cereal harvest, is expected to be above average, thanks to the good rains that we had from December to April. The prices of copper and zinc, which are some of our key commodity exports, has also continued to rise, and the De Beers's diamond sales has actually also improved compared to last year. Now, most industry level indicators still make for horrible reading, right? As we can see on this graph. The exceptions are the total number of new vehicles sold, which rose by 11.8%, and the composite cargo index, which also increased by 4.1% during the same period. The very important mining composite index decreased by 24.6% year on year, and that is just driven by a decline in the diamond and zinc and gold indices. So the saddest graph on here is what we've been talking about previously, and that is the index for the international arrivals, which just remains the worst affected. So it's still showing a dramatic decline of 72% over Q1 2021. Now, that is also the one to keep a lookout for in the next quarter, because in Q1 2021, that was the end of March. So you still had January, February, March. The real restrictions only came mid to end March in the national arena. So Q2 numbers, Q2 2021 numbers are the ones that I'm looking for, because then you will be able to see whether we actually got some tourists back in this last peak over the huge shutdown decline that we've seen. So it's going to take a lot to get it back to where it was, but we would like to see some improved numbers. So if we do see improved numbers, just know it's coming off an extremely low base. Is what we're talking about here as well. Livestock marketed, also just huge declines, continue to decline because of the unavailability of livestock due to restocking, which follows successive years of devastating drought. So you can see both of those lines on the livestock. In 2020, 2020 down 32%, 2021 down 38%. So how long is it going to take to get back to the levels that it was at? Sometimes we need to look as a positive, because we can now kind of reset, right? Yeah. So we're now at the bottom, I hope, with our livestock, and we can improve from there.
So, Eloise, thank you so much for giving us a breakdown really of what happened throughout last year, and what you think is going to happen if we're really going to see that 3.1%. But ideally, I want to really ask, from all this, from your observations, where do you think are the pockets of growth for 2021? And then second to that, I think based on then what you answer, is this a reason why we're seeing companies kind of consolidating, some buying out the other ones?
Yes, if I had that same question, where are we going to see rebound, right? Where are the sectors that we can have optimism about? Yeah. And what I then did is I did an analysis of the 5-year growth rates in the sectors, in all the sectors of the economy in the 5 years pre-COVID. So the total economy grew by 0.8% per year for the 5 years up to the beginning of COVID, or to the end of 2019. And then you had this huge decline, right, in 2020. And the sectors that were doing well, that were actually growing well pre-COVID, were the ICT industry, the transport industry, and the travel industry. So those are the sectors that I would expect be able to rebound best, because they were in the best shape pre-pandemic. Now, I've got a caveat here for the tourism industry. We're hoping that those businesses that were doing so well pre-COVID actually survive this. And that is my biggest concern. I hope the capacity is still there. I hope our lodges, our restaurants, our hotels, our tourism operators survived in order to continue the great work that was being done pre-COVID. Yeah. Now, if you're talking about consolidation, that's exactly now what's going to happen, right? In the entire economy, you're going to see businesses that held on during this time, who maybe they laid off a lot of people, maybe they cut their spending down to the bone, but they survived. And you've got others that were just going to falter. And so that's going to be a part of this consolidation. It's going to be businesses that were still healthy enough to survive, being able now to buy out some of the companies that were suffering. So that's some part of the consolidation. The other part is just simply a streamlining of the economy, where you might have had too many players in an industry competing for the same pie. And now, again, because of the streamlining, the bigger players are going to say, let me buy up some of this competition and actually make, take a bigger piece of the pie for myself. Now, this is probably a very unpopular opinion, but I have felt for many years that there were a lot of businesses in the Namibian economy that were making a lot of money, but not providing a great service. And what I understand now from a lot of players in the industry is that when you ask for a quotation now, you get it immediately. People are hungry for business. People really want to operate, and that's great. And that will improve our competitiveness. And I think that will actually build our economy again. So I'm not against the consolidation. I think that it's actually useful, and the economy will go through cycles, right? So this company that's now so big, because it's bought up a lot of its competition, 5 years down the line, it's also grown too big and too fat. And some of the employees in that company says, you know what, we're making too much money. No one here really cares about service anymore because we're the only game in town. Let me start my own company. And they break away and start their own company. And that is what's important, is that the regulatory conditions need to be right for that employee to be able to say, I'm going to start my own business now. So we need to have an easy way for him to register his new business. It shouldn't take 66 days. It should be quick to register a new business. It should be easy to get the fitness certificates. It should be easy to open a bank account. It should be easy to register for tax. Preferably, small businesses shouldn't pay too much tax and shouldn't be taxed in the same way as the big businesses are, so that we can revive that entire cycle that happens. So this is, to me, a very natural cycle occurring now with the consolidation. It's needed, it's required. You don't want to sit with capacity just slack in the economy, and this can actually can help regenerate a lot of economic activity.
You know what? When you mentioned about now getting a quotation in a split second, I'm just thinking, if only there was a way we could kind of shift the same thing to government, where you really just go into the office, set an office, and get your thing out. I think that will be great. And it's possibly because I think there's a conversation we had as well, where we felt, I don't think government employees themselves really felt the whole heat of COVID-19, because I mean, some of them, most, if not all of them, maintained the same salary, getting the same, nothing was cut on the end. So I think they're still stuck in that. But yeah, interesting times.
Interesting times. And I do think that we can create jobs so that we don't need a huge public sector for job creation. I think that there can be stimulus in the private sector, where a lot of the people that are currently employed by government can be employed by the private sector as well.
So Eloise, thank you so much for that. And we'll again call you back to see if it really transpired to the 3.1% growth. And thank you all for always coming through and explaining this was. Yes, and that was Eloise du Plesis, Head of Research, PSG Namibia, bringing us a breakdown and really unpacking the economic outlook of the Namibian economy through 2021 and where we were last year. And that's it from my end. My name is Lazarus Amukeshe. Thank you for watching, and do subscribe to the Namibian YouTube channel.